And first of all, let's get your thoughts on the Naira strengthening and the reasons for that.
Okay, good morning, Wole. The Naira strengthened yesterday. In fact, it was a trend that started on Monday, because on Monday we opened at a high of about 158.4050, and as at yesterday, it had trended down to 157.4555, almost a 1 Naira appreciation during the course of the week. The main reason for this is not far-fetched. We had two auctions on Wednesday. We had a Treasury bills auction, and we also had the FGM bonds auction. Now, these auctions, especially where you have the Treasury bills auction offering the 1-year Treasury bills, attract a lot of offshore appetite. And so we saw a lot of the offshores coming into these auctions. In fact, for the Treasury bill auction, the 1 year, which is the toast of the offshore interest, printed at 12.50 levels, and we had a subscription of over 200% subscription level. So we did see a lot of interest,
Okay, so
auctions,
it's really the interest we're seeing from the foreign investors. But let's get your thoughts on that in particular. And compare that interest today, now that we see yields where they are. Clearly, yields have come down by about 300 basis points over the last few months. Your thoughts on the level of interest today compared to what we saw before? We know that they will continue to look at Nigerian bonds because of the yields relative to what they will get in many developed markets. But have we seen much less interest today compared to maybe about 2 months ago?
Well, compared to, if we take, for example, if you take the FGM bonds auction, compared to what we saw in, say, about September, October period, you might say that the interest is a bit muted, but you know that was when we were listed and in the index, and that generated quite a substantial amount of initial interest. But yes, the flows have been more or less steady. We're still seeing flows coming in, still seeing considerable interest. So right now it's more or less stable. In this particular auction, the Wednesday's auction, we had a situation where we did see probably a little bit heavier than the last auction because of the fact that inflation printed at lower than expected levels. Most people had thought that because of the effect of the floods in certain areas of the country, that we would see inflation ticking seriously up, but it moved just about from 11.3 to 11.7, which was lower than what most people expected, and that is likely to have resulted in the more than usual interest we had in the FGM bond auction. On the Treasury bill side, we still see the auctions. The levels we are at now are still attractive, considering where inflation is and considering the good reports we've had recently on Nigeria's ratings.
All right, but what can we take away in terms of yields for those auctions? Your thoughts on where the yields sit today from the auction results?
Well, the yields are printing lower at each auction, and that's expected because of the size of demand we're seeing there. In the Treasury bill auction, the 91-day, 182-day, and 364 days were offered, and they printed at 12.4, 12.44, and 12.5%. So you'd see that pretty close trading, and this is much lower than what happened at the previous auction.
But what about the bonds? For the bonds, we're seeing 12.5%, 12% for the 7 and the 10 year, compared to what we've seen in the past. Clearly, these are much lower yields. But what are your thoughts on the direction of yields for these auctions now?
Yes, there are much lower yields, and what happened initially after the auction was that we had a sell-off, mostly by local players, and it reversed the trend, so we had yields going up again after the auction. So it's ticked back up, but we see subsequently going forward, we do see the yields continue to trend downwards.
Is there any more information about this new Barclays Capital Bond Index and the impact it's likely to have on our bond market? Clearly, we saw the impact when we saw Nigeria added to JP Morgan Index. Your thoughts on the impact it's likely to have on our bond market?
I think right now the impact is not going to be something that will be as dramatic as the last one, the JP Morgan. It's not going to be dramatic because there's a long lead time, and we've already had people coming to invest in the FGM bonds on the back of the JP Morgan. So probably not as dramatic as that, but I do see it, of course, increasing the appetite for FGM bonds.